Hello and welcome everyone to Gold Asset of the Day for the 5th of May 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into the middle of the week here, what do you need to be aware of? As we discussed on the week ahead commodity report, you could expect at the beginning of this week, with the bank holidays that we had in the UK, in China, and also in Japan, for bigger volatility than normal, exaggerated moves on the market, and watch out for dollar strength to come in as we transition into the first week of May. So we've seen the dollar have a significant breakout to the upside on Tuesday. We have 5 positions on the dollar, as we mentioned to you on the week ahead report that we've been building in with our members over the last week, getting nice and early into those trades in anticipation for liquidation events as we go into the first week of May. We saw right at the end of April, rebalancing our portfolios, traders taking their profit off the table for the end of the month, capital flow into the dollar. That's continued to follow through to the upside this week. And of course, we've now started to see that corrective move lower on metals that we anticipated with you, which is a correction lower on both gold and silver. In fact, last week, we mentioned to you that we took that opportunity, especially on the dips, following on from the FOMC statement, to add another 6th position to silver. That broke out to the upside 4% on Monday, gave us a very quick opportunity just to take some profits off the table, protect the trade, and that's already locked us in 100 points for silver just within 24 hours from getting into that position towards the end of last week. And of course, for every one lot that you'd be trading, a 100-point move like that for silver, that's going to be $10,000 of profit. For every 10 lots that you'd be trading, a 100-point move like that on silver, that's $100,000 of profit that you'd be making in just a matter of a few days there. Now then, if we look at gold right now, gold, again, another failed attempt to get up towards 1800. This is where many slow technical traders using their outdated technical analysis strategies have FOMO'd in, they're bought in too high, they're getting their delayed confirmations on gold, on silver, on gold miners, only to then see the dollar ramp up to the upside, and then they get liquidated on the sell-offs that we've seen on gold miners, on gold, and also silver over the last 24 hours, as you've seen the corrective price action come back in once London have come online. And of course, later on this week, we also have non-farm payroll data. So I would watch out for this over this week. We are anticipating strength to build in the dollar. As you know, we were building positions last week on the dollar index, warning you that typically at the end of the month, you see rebalancing of portfolios, capital flowing to the dollar. And as we transition into May, especially the first week, the dollar will pick up momentum. That's exactly what we've seen. Many of you reach out to us that a lot of this analysis helps you massively, especially where some of you have been unfortunately taught incorrectly, utilizing outdated, gimmicky, old technical indicators and strategies, which quite simply don't work in these market conditions. You need more data, intelligence, statistics, facts in the market, the key drivers that will have a big impact on commodities. Understand capital flows, very important, key areas of liquidity that are targeted. On Tuesday, we saw many levels which were attempted to break out from on the metals, which then got sold into. They were faded. So market makers have specifically targeted those levels as just a breakout above a very key zone, enough to lure in technical traders who get their delayed confirmation to buy in and FOMO at the top. Then the market gets slammed lower. You can see it out there. The sentiment is getting overly bullish right now for gold and silver. It's all of these traders that are getting right in at the end of the move, their delayed confirmations, and then we see the sell-off. Now, with that said, I am expecting range-bound price action on the metals. I do think these opportunities will be a gift to buy in as you see corrective price action on gold and silver. We are looking to accumulate on these dips. So I will continue to do that. We are long the dollar, which is providing us with a really nice trade over the course of this week at the moment, but we also want to be looking at opportunities to buy in on these corrective pullbacks on gold and silver, particularly as we get towards the middle of the month of May and we get towards the end of the month into June and then July. Typically these are stronger months for the metals, but May tends to not be such a great month at the start of the month for the metal. So the strength on the dollar is a great way to hedge against that. And then when you get the corrective price action on the metals, we can build up those positions. But again, many traders have got it the opposite way around. They've ended up buying right at the top. They end up panic selling out at the lows, and then when the markets are providing those great opportunities, they've already been liquidated or panic sold out of their trades, or the technical indicators are telling them it's now going bearish, when you should in fact be buying into that market. You no doubt know how it goes if you've been following our channel for a while now. We've been talking you through all of the massive opportunities to build into the metals since the beginning of April, getting nice and early into those positions when most traders out there were getting very scared and panic selling out of their positions. And now what you want to be aware of is just the cycle that we typically see as we go into the first week of May. So hopefully many of you have been able to capitalize so far on the price action that we've seen over the last couple of days here. We have again seen the exaggerated move with China on their Labor Day holidays. Remember, China will be back from Wednesday onwards from their public holidays. We've got London is now back after Monday's bank holiday, and we'll also have Japan back online as well. So you should resume with normal liquidity later on in the week. And of course, we have non-farm payrolls on Friday as well, which can be a catalyst for really big moves as well. So that's really what you want to understand. The key news items that will have a big catalyst in the market, marry that up with the intermarket correlations, the ratios, macroeconomics, data, intelligence, statistics, market intelligence, understanding of the seasonal playbook, the key times of year that certain commodities perform extremely well, and also understanding capital flows in the market. That will help you massively too, and marry that up also with what the hedge funds, money managers, banks and institutions are doing. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to become a member of the Gold and Silver Club.